The woman crying in the video is an investor in Shandong Fanhua Insurance. Since last year, a product called the Employee Stock Ownership Plan offered by the company has failed to deliver returns. Investors ended up losing all their money. It said that nearly 9 billion yuan was involved. That's about 1.24 billion US dollars. In late March, crowds of anxious investors gathered outside the Fanhua Insurance office in Shandong. Some cried and shouted, others held up signs. They said their hard-earned savings had been swallowed up. Many were so overwhelmed that they broke down emotionally. Some were even hospitalized. Fanhua Insurance is a disgrace to the industry. They tricked us ordinary people in the name of insurance. Because we trusted the system, we put our money here. Fanhua Insurance is a scam, a huge scam. They should be wiped out. A similar scene took place in front of the police bureau in Zhaozhuang, another city in Shandong. In early March, dozens of people knelt outside the building. One man led the group and shouted, "We're begging you, please help us. We can't survive like this." The others knelt and bowed their heads to the ground. So, what exactly happened? According to the people who gathered there, they're victims of a financial collapse tied to Janghai Group, a company based in Shandong. After the company's founder fled, these people have been pleading with the local government to help recover 28 billion yuan, about 3.85 billion US dollars. Public records and victim accounts show that Janghai Group started in a city in Shandong and held legal business permits. At first, it promoted itself as a financial services platform that supported small and medium-sized enterprises with emergency loans. Over time, the group expanded across all 15 cities in the province, setting up more than 130 companies and spreading into smaller towns and districts. Some of the affiliated companies included Weifang Industrial Finance, Dezhou Industrial Finance, and Qingdao Industrial Finance. The reason people knelt outside the Zhaozhuang Police Bureau is because in August 2024, Janghai Group suddenly collapsed due to interrupted financing. Reports say that Janghai Group and its related companies collected hundreds of billions of yuan from the public. Victims are now trying to recover about 28 billion yuan. But according to multiple sources, after the collapse, the company's chairman, An Zhibing, whose real name is An Zhicheng, and his wife Zhou Chunwei quickly got help from local officials to leave the country. They're now believed to be overseas. The government has said the case is still under investigation. For now, it has been classified as illegally absorbing public deposits, but the final charges will depend on a court decision. What's even more surprising to the victims is what happened on October 9th last year. At the Dongying Public Security Bureau's Economic Investigation Division, Team Leader Wan, Officer Zhu, and Team Leader Wang from the local economic crime unit, along with 40 victims of the Janghai case from Dongying, held a meeting to discuss the case. Team Leader Wan reported that 12 salespeople from the Dongying Runchuan Zhongzhu company affiliated with Janghai had been arrested, and about 56,400 US dollars had been recovered. However, most of the contracts the victims held were considered forgeries. Even more shocking was the dispute over whether the case should be classified as illegal fundraising or contract fraud. Reports say that on October 9, 2024, during the meeting, the police classified the case as illegal fundraising, but the victims rejected this and said they didn't accept or recognize this decision. The investors believe that this is clearly an organized, premeditated scam involving 28 billion yuan, around 3.85 billion US dollars. They believe it should be prosecuted as contract fraud, but the police are treating it as illegal fundraising, seemingly to avoid deeper, more complex issues. Meanwhile, in several cities across Shandong, groups of victims have been seen kneeling to demand justice. Some investors have planned large-scale petitions, sit-ins, and even hunger strikes, calling on the provincial government and higher authorities like the Central Commission for Discipline Inspection and the Ministry of Public Security to intervene in the investigation. However, these efforts have led to many being detained or subjected to stability maintenance tactics. Social media has seen posts from victims saying they face various obstacles when trying to raise their concerns. One victim, Ms. Zhang, pointed out that the local government isn't helping resolve the issue, but instead is suppressing the victims. She admitted that she had organized large-scale protests, including a silent protest and hunger strike outside the Shandong Provincial Party Committee. Another victim from Bingzhou explained that the Janghai Group had 6 major subsidiaries that conducted emergency loan businesses, signing cooperation agreements with local investment companies. A large number of business personnel were involved in promoting these services. The group even held events in various regions to offer loan services. However, after the collapse, many people involved in the business fled, and assets were transferred. In Bingzhou alone, over 100 business personnel were involved, affecting nearly 800 families. After the crash, many senior executives and staff were free, and assets were transferred repeatedly, making it impossible to file complaints. She also shared that she invested 5 million yuan, around $688,000. She ended up losing everything, leading to months of crying. Her eyes were so bloodshot she nearly went blind. Some local victims, unable to bear the loss, chose to take their own lives, while others died from depression. What's more upsetting is that these are the hard-earned savings of hundreds of thousands of people, but they are suddenly being labeled as illegal fundraising participants or disturbers of social order. Many people are now realizing that when local governments and businesses get too close, victims' legitimate rights are often ignored in the name of preventing large-scale unrest. Some have been threatened in silence, and some have been violently cleared from protest sites. Some even had their way home blocked. This has left many investors stuck in a difficult position, and the conflict is growing sharper by the day. Victims have revealed that Janghai Group has long been closely connected with the government. Not only does it have various official qualifications, but it also received significant support from local government platforms. Some victims reported that local government departments frequently held joint promotional events with Janghai or its subsidiaries, encouraging the public to invest money to support small and medium-sized enterprises and promote the real economy. Government official speeches, photos from events, and industry finance cooperation signing ceremonies were all used in promotional materials, providing what appeared to be a legitimate cover. This led many people to trust Janghai completely. They believed that since the government had officially approved and regulated it, their investments were safe. Additionally, several official and semi-official media outlets extensively reported on Janghai's efforts to boost the local economy, convincing investors that it was a well-backed, reputable company with government approval. Moreover, according to some investors, Janghai promised monthly interest rates as high as 8% or even 10%, far exceeding typical bank savings or investment products. In comparison, the stock market and other financing channels seemed too unstable. Janghai offered higher returns and claimed to cooperate with various government platforms, which explained how it was able to quickly attract large amounts of money in a short period. However, the large amounts of money required to pay these high interest rates raised questions. Where was all the invested money actually going? In response, Team Leader Wan from the Dongying Public Security Bureau's Economic Investigation Division said it was inconvenient to disclose this information. This series of events is not only a reflection on the financial chaos in Shandong, but also represents a broader sense of public deception and a crisis of government credibility. In the age of internet information, a single financial collapse in any region can become a spark that ignites widespread unrest. While local governments can suppress these incidents temporarily through administrative measures, as long as the core issues are not addressed, public anger and fear will continue to simmer beneath the surface. At the same time, in addition to the victims of Janghai protesting, there have been recent reports from Shandong of people seeking justice for money lost to other Chinese financial platforms. In early February, the Jieyue United Financial Company in Zibo, Shandong, collapsed. Victims were unable to receive their principal and interest. They knelt and begged outside government offices for help. On December 25, 2024, another collapse occurred with the Baiyi Financial Group in Lingyi, Shandong, which had attracted investments with high interest rates. Victims then took to the streets in protest. Experts have pointed out that these types of incidents are not simply about bad bosses running off with money. They reflect deeper social and political issues. Industry insiders believe the frequent occurrence of events like Janghai's collapse highlights significant gaps in the system. In a normal rule of law environment, large-scale public fundraising must undergo strict approval and regulatory processes. Regardless of the size of a financial company, it must conduct risk assessments and disclose information according to the law. However, in some regions, due to political achievements or local interests, governments and businesses often form an unspoken understanding. In these cases, regulation becomes a mere formality, and the mechanisms meant to hold officials accountable fail to function properly. The Janghai case fully exposed this issue. Behind hundreds of thousands of investors, there was no timely information disclosure or transparent explanation of how funds were used. Internal company documents appeared to be falsified, and even loan contracts could have been forged. If it hadn't been for media investigations and the victims organizing to demand their rights, many truths may still be hidden. Looking at the collapses of Shandong Fanhua Insurance, the Zibo financial platform, and the Linyi financial platform, it is clear that some financial institutions in Shandong have serious issues with risk management and insufficient regulation. Overall, these events reveal that, as the local financial market develops rapidly, some platforms have neglected basic risk management in pursuit of high returns. As a result, when problems arise, the interests of ordinary investors are severely harmed. Additionally, Janghai Group was involved in collusion with government. Corruption among CCP officials has been an ongoing issue, and the phenomenon of collusion between government and business, as well as money and power transactions, is quite common. Over the past decade, Janghai Group has built a large financial and investment network across Shandong, and this massive expansion could not have happened without the support and tacit approval of the local government. Many victims question, why has the CCP ignored the risks posed by these platforms? Why, after the funds collapsed, didn't they immediately freeze and investigate the assets of the leadership? Instead, the group's leaders managed to escape to the United States. Some rumors suggest there may be higher-level protection behind the scenes, or perhaps local governments don't want to reopen old cases because doing so would reveal more of the dark connections between officials and capital. This is likely why the police chose to classify the case as illegal fundraising. On March 20th, the U.S. Office of the Director of National Intelligence released a report on the wealth and corruption activities of Chinese Communist Party leaders. The report states that the level of corruption in China varies by region and government level. An academic study on corruption in a particular city found that 8% to 65% of officials received unofficial income through bribery or embezzlement. Another study and public opinion survey estimated that about 50% of CCP officials are involved in corruption, especially at the local level. These analyses suggest that bribery can increase officials' legal income by 4 to 6 times, with higher-ranking officials receiving more income through bribery and embezzlement, corresponding to their rank and power. Together, these studies highlight the widespread and pervasive nature of corruption within the CCP and the country. Although in recent years, the CCP has focused on punishing collusion as part of its anti-corruption efforts, a law scholar who uses a pseudonym told New Tang Dynasty that in the CCP's authoritarian system, these so-called anti-corruption measures are just for show and have no real impact. They said, without the rule of law, without a transparent supervisory system, public officials cannot constrain themselves. They can easily put on one face publicly, while acting completely differently behind the scenes. Some people in China say that in the CCP system, the upper level has policies, and the lower level has countermeasures. They also pointed out that for a long time, the CCP's authoritarian system has allowed its officials to hold unlimited, unchecked power. For entrepreneurs, it's very difficult to run a business normally without bribing or offering gifts, and this is a very common phenomenon. Only by implementing a transparent regulatory system that protects businesses under the law can public power be constrained. Additionally, Professor Ming-Xing Pei, a political science professor at Claremont McKenna College in California, pointed out that the CCP's anti-corruption campaign is counterproductive. There is a wealth of academic literature on governing corruption, and these studies argue that rooting out corruption cannot be done through an anti-corruption campaign. Anti-corruption for the sake of anti-corruption will never work. The fundamental causes of corruption are clear. First, government operations are not transparent. Second, there is no public oversight, especially from the media or civil society groups. And third, there is excessive government intervention in the economy, particularly through state-owned enterprises and various administrative regulations governing asset ownership and distribution. Over the past 12 years, what Xi Jinping has done is essentially the opposite. Government intervention in the economy has increased, while suppression of civil groups and control of speech have become stricter, preventing corruption from being tackled at its roots. It's no surprise that the more government tries to fight corruption, the worse it gets. At the same time, in today's society, stability is regarded as more important than anything else. Once large numbers of investors start protesting, it is seen as a major risk signal. Local governments tend to prioritize maintaining stability because they fear the large-scale protests might trigger a chain reaction, leading to accountability from higher authorities and the petitioning departments. As a result, victims not only fail to receive real legal assistance, but also face the risk of suppression. This approach not only damages the government's credibility, but also plunges innocent citizens into deeper despair. For those who invested all their savings, or even sold their homes and land, the impact is not just financial. It's a complete collapse of trust in both society and the government. Overall, the frequent occurrence of major financial scandals involving government business collusion in China has left the public feeling fearful. People once trusted government's endorsement and the official documents, believing that by contributing to national economic development, they would be protected and rewarded. But time and time again, the facts show that without transparency and effective regulation, ordinary people are eventually dragged into a bottomless trap. In response, some netizens have written that no one can predict how the situation will end. If, as rumors suggest, the chairman and his wife are living freely abroad, it would be a huge blow to hundreds of thousands of Chinese families. The protests in Shandong are just the beginning. It's not only a challenge to the local government's power, but also a warning for similar financial chaos across the country.